Hello friends, welcome to FPSB webinar. We are covering a different topic today, which is about risk management of firms and corporate. You may link that topic with your own general insurance, like the way you take motor insurance. Many people are bound to many people cover just their liability insurance by taking third-party cover because that's mandatory. So many corporate may also resort to a mandatory cover, which is at the minimum. So, but they may not be covering their entire liabilities, or rather the pectoral liabilities which are at risk, and those liabilities may affect their reputation, their compliance issues, some legal issues also. So we are covering a liability issue here, a liability insurance about the corporate and firms, and we are covering this in our curriculum also for the candidates who are pursuing our CFP certification program. It's good for them. We have in our midst Mr. Puneet Chandra. Puneet Chandra is the founder director of Sivana Insurance Brokers Private Limited. He started this firm way back in 2010. Puneet is an alumnus of Ford School of Management. He is an associate of Insurance Institute of India. He also completed his diploma in health insurance from the same institute, Insurance Institute of India. That was in the year 2012. Puneet is also a certified composite broker from National Insurance Academy, Pune. Puneet has over 16 years of experience in the insurance sector and has held various positions like financial lines underwriting and B2B tech marketing. He has been associated with a leading private general insurance company in its business development. Welcome, Puneet. Hello, Puneet.
Good afternoon, Pushkar ji.
Puneet, just from your profile, I've picked one line. Puneet is born and brought up in Delhi and stays there with his spouse and 2 sons. He loves motorbike rides and plays guitar. So one activity, motorbike rides, you are burning rubber, high speeds, and that's you are very aggressive. And while playing guitar, you have to be calm. So Puneet, how do you manage both the activities together?
To the contrary, Pushkar ji, both the activities you require to keep your calm.
Oh
And
yes, yes,
while
you have
while
hit it. Yeah,
while riding a motorbike, you need to be very peaceful in your mind.
absolutely.
Focus on the road ahead. Yes.
So you are a true a core general insurance person. Thank you, Puneet, for clarifying. Puneet, you can go ahead with your PPT. I'll be in the background and just looking forward to any questions that they crop up. I will be just portraying those questions to you during the web presentation also. Maybe we can take in the end. So over to you, Puneet. All the best.
Thank you so much, Pushkar ji. I'll just take a moment to share my screen and take a quick confirmation.
Sure.
Okay. I hope that my screen
Yes,
is visible.
Puneet, it's visible. We can see it. Yeah, can go ahead, please.
Okay, wonderful. So, very good afternoon, everyone. I would like to thank FPSB India, Alok ji and Pushkar ji for giving me this opportunity to present to all of you today. So, without further ado, I will start with today's session. I've titled this session as Putting Your Risk Management Philosophy in Perspective because, as financial professionals, day in, day out, we measure various types of risks and a risk exposure of our clients, be it speculative risk or be it pure risk. We, as financial planners or investment planners, employ various techniques to reduce the speculative risk by using models where we maximize returns by taking minimum relative risk, thereby bringing our client's portfolio as close as possible to the efficient frontier as we can. So, To curb the speculative risk, of course, we have various kind of techniques, but to curb or hedge pure risk, the best tool available is insurance. My approach is very simple. I follow the balance sheet approach to understand the assets of any business and the potential liabilities pertaining to that business. And once that is done, it is easy to find the relevant insurance product which can protect the client from any loss of assets or due to potential liability falling upon them. Today, I will be talking briefly about two liability line of products: employees compensation and directors and officers liability. If you think carefully, then employees are falling on both sides of the balance sheet. They are a company's biggest assets, but the organization is exposed to potential liability as well arising from employees. So employees compensation insurance is designed to protect against the risk of potential liability falling upon the employer from the employees. As per the Employees Compensation Act, all employees who have suffered injury at work have the right to demand compensation from their employers. And all employers are liable to compensate its employees whether or not they have taken any insurance. So don't you feel that prevention is better than cure, and it would be wise to have an appropriate insurance? So to summarize what I just stated is workmen compensation or employees compensation is a form of insurance that provides compensation for medical care of employees who are injured at work in exchange for mandatory relinquishment of the employee's right to sue their employer. Of course, once you have been compensated, then why would you want to take any legal action? Moving on, so who is liable? Now that I've provided a brief overview of the need of this form of insurance, let me quickly run through the nuances of this product. As mentioned earlier, employer is liable for extending compensation to the employee who has suffered accidental injury arising out of or in the course of employment. This may result in death, or this may result in disablement, may be partial or total or temporary. The employees compensation liability insurance is a type of act policy. The term act policy is used when the insurance product replicates the provisions of a statutory act of India. The erstwhile Workmen Compensation Act of 1923 needed revamping, and a new act was passed through the Gazette of India in the year 2009. This slide highlights a few of the key differences. I would urge all of you to absorb these in the light of its impact on the insurance contract and the policy in its current form, and its impact on the probable premium cost and the potential claims, which amounts to any amount in case of any mishap. So the name of act changed from workmen compensation to employees compensation. Well, reason being the word workman or workmen was replaced by employee or employees. So it is applicable across board and not only for construction workers or factory workers, which one might presume. The act even extends to an IT company employing software engineers. The next change which happened in the new act vis-a-vis the old act was the minimum compensation amount of death and disablement have been revised from 80,000 to 1,20,000 and 90,000 to 1,40,000 respectively. The right of employee to claim medical expenses incurred due to an injury was non-existent in the old act. This is an important revision in this act. The relevant factor for compensation computation has been raised from 4,000 to 8,000 rupees per month. This has had a huge impact in the computation and the calculations of compensation, which we will cover later in the slide today. Timely settlement within 3 months has been made mandatory under the new act. Non-compliance attracts penalties. Now, we've covered the old act versus the new act, the pre-amendment position and what the post-amendment position was, and it will be clear in the later part of the presentation what the impact of this has on the overall functioning of the product. Now moving on to the procurement stage of the employee's compensation insurance. Any applicant must provide the following information in order to gather the quotes from the market. Remember that there are approximately around 24 general insurance companies in the market, out of which I know for a fact that 20 have employees compensation insurance products. As an insurance broker, it is our job to represent our client to the entire available market and pick the best suited option in terms of pricing and clauses for our clients. Please note that the nature of work is the most important factor defining the premium competition. A software engineer on a desk job would attract much less premium than a worker cleaning the windows outside of his office. Perspective. So moving on to the extensions, these include medical expenses extension and occupational disease extension. Please note that although the law requires the employer to pay for the damages and compensation, but the base insurance product does not cover these extensions. So in order to include these coverages, the applicant must opt and pay for the additional premium for such extensions. Needless to mention at this particular moment that it does come at an extra cost, and unfortunately most of the times the client is not guided properly, thereby resulting in purchasing a policy which is not best suited. For example, a chemical factory where workers have been working for years and years do not purchase an occupational disease extension. That would be a blunder. Now to the most important part of this section of our presentation, the compensation or the settlement methodology. This is what Sivana's alpha is when it comes to understanding of a product. Most operate primarily on the procurement stage of the insurance cycle. The real test happens when a claim comes. As brokers, we handhold our client through the entire claims process. It is our key responsibility as brokers. Now we need to handhold our client through the entire policy phase, making the clients aware of the coverage and the relevant documentation which are required is one of the many things which we do as brokers. The compensation amount is calculated using a simple formula, which is on the next slide, wherein the basic factor of 8,000 rupees per month of the wages is multiplied by the relevant age factor which is there mentioned in the annexure of the act. So as I mentioned in the earlier slide that the death factor will be the amount equivalent to 50% of the entire compensation calculated by the base monthly figure multiplied by the age factor, and the disablement compensation is capped at 60% of this figure. So this is another example where if I say that a worker who is earning a monthly wage of 3,000 rupees, they will still be the compensation which will be calculated will be basis the relevant age factor. It will be clear from the previous slide. So if a worker is earning 8,000 rupees in a month and is 46 years old, then the compensation will be calculated at 13,30,000. That will be the factor which will be considered in case of death. The maximum amount payable will be 50% of this 13,30,000, and in case of permanent disablement, the maximum compensation will be 60% of this 13,30,000. So moving on to the next section, which basically takes care of the mode of payment and the methodology and the procedure which one should follow. So an important part at this stage is that the settlement of compensation is not payable to the workman directly. It must be deposited with the Workmen Compensation Commissioner, who will then pay it to the employee or the workman. Any payments made directly to the workman or dependents will not be deemed as payment of compensation. So we come across many cases wherein after an accident there is a settlement made between the employer and the worker or the employee directly without involving the workman compensation, and even after that the worker goes and drags the employer to the court of law, and the Workmen Compensation dismisses the fact that the employer had paid the compensation and still directs the employer to pay as per the compensation procedure and the act. So just a few, this slide might seem to be a little cluttered, but just to highlight a few points on this particular slide is that, as I mentioned earlier, in the new act, it has been made very clear that the compensation settlement has to happen within 3 months of the order being passed. Now, if that does not happen and the reason is not justified for the delay, then the compensation commissioner can leeway up to 50% of penalty over and above the compensation declared. Mind you, insurance policies do not cover such penalties. So it is always advisable that the employer pays on time. And of course, in this particular scenario, the insurance company comes into the picture, and as soon as the order is passed, the insurance companies settle the claim. Some of the key exclusions, every insurance policy has an exclusion section, and it is important for us as brokers to understand and study these parts so that there isn't anything excluded explicitly which pertains directly to the risk involved. So, for example, liability to employees of contractors of the insured, by default, this is excluded under the policy. Therefore, it is always preferable, or rather it should be mandatory, that the advisor or the consultant, they do ask the client whether they are involving any subcontractors in the project or not. If the employees are directly not on the roll of the insured and they have subcontracted the work to people who are employed on the roles of someone else, then that has to be declared at the time of purchasing the policy. Similarly, any non-fatal injury which is caused by an accident directly under the influence of drinks is not included. Willful disobedience is not included. Willful removal of disregard of safety guard devices are not. This is a willful negligence which is outside the purview of insurance. So these are some of the exclusions of the insurance contract. To wrap up this particular section and the first part of our presentation today, the documents which are required include the claim form with the details of the accident, a medical certificate is required, wages statement is required as a proof of wage and proof of employment, and proof of age is required, and another annexure to the claim form with a detailed version about the incident is required at the time of claim. Okay, so that was the first part of today's webinar. Now, before I'll just quickly run through the chat box. If there are any questions, I can probably take a few questions. I don't see anything. Okay.
Yeah, you can proceed, Chandra. There are hardly any questions as of now.
Okay, fair enough. So next on our list is Directors and Officers Liability Insurance. Now, before I start with this section, I would like to draw your attention to the basic fact that any public limited company, private limited company, trust, institution is a separate entity. You may recall that under income tax, each person is defined separately, and therefore directors and officers are only the caretakers of the company. They are fulfilling their fiduciary responsibility while taking care of the day-to-day operations of any company. So as mentioned in the beginning of this session, that we will be taking care of two liability side of risk as per any balance sheet, and the directors and officers therefore are exposed to a lot of potential liability from all sides and under various circumstances. So D&O liability insurance protects the directors and officers from their personal liability and financial loss arising out of decisions and actions taken in their official capacity. From the list of all the products available to protect the potential liabilities of any business, I personally feel that directors and officers liability insurance is the most evolving and dynamic insurance product. Remember, the D&O insurance belongs to each and every director and officer, and it does not belong to the entity. Importance of this fact comes to the light under various liquidation scenarios where the official liquidator cannot attach the protection under this policy to the entity. The policy takes care of the defense cost as well. Rather, most of the liability insurance products take care of the defense cost involved during the litigation. The policy can be structured to protect and extend cover to entity under circumstances like employment practices or any security liability falling upon the entity. I'm talking about the private limited or the public limited company over here. A gamut of additional features and benefits like extended cover to include the subsidiary entities, outside directorship, pollution liability, and many other also form part of the offering, but you have to go through the policy wordings to really understand what kind of add-on covers are included under the offer. Now moving on, the D&O liability insurance policy is structured with two main insuring clauses constituting the cover, Side A and Side B. Side C is added to extend cover to the entity itself for protecting it from liability arising from things like employment practices or securities claim. But the primary objective and the idea of having a D&O liability insurance is to extend cover to the directors and officers. Let's discuss Side A and Side B first. I will quickly cover Side B first, which would make Side A little more clearer. Now, directors and officers, while acting as fiduciaries of the entity, take multiple decisions. It is therefore necessary that the entity itself also extends some kind of protection to its directors and officers. After all, they are running the company and earning money for the shareholders and the owners of the company. So therefore, the Companies Act itself allows the entity to protect its directors and officers and extend indemnity to them. So Side B is when a company protects the directors on for any legal action taken against them, and Side A is when the company is not allowed by the Companies Act per se to indemnify the directors and officers, and therefore under such circumstances the D&Os are left high and dry to fight for themselves. We will cover this in detail in the coming slides. So who can be the potential claimants? Or in other words, who can sue the D&Os for alleged wrongful act? It can be employees, it can be the regulator, it can be customers, shareholders, liquidators and receivers, competitors, investors, or creditors. So these are, it gives a broad overview of all these sides where the potential liability can come from for any director or officer. To give you a few scenarios where typically a D&O liability insurance comes in handy are restating the financial results. This is the lowest hanging fruit for any potential claimant to allege a wrongdoing by a director or officer. On similar lines, if the earnings fail to meet the projections or the expectation, the investors take the D&Os to task and hold them responsible. Non-disclosure of any investigation by D&O can work against them and drag them to court. Internal SOPs or internal practices of a company, or putting it very crudely, questionable practices by any officer of the company can trigger the policy. Now, these are just a few examples. As I said, D&O is the most dynamic insurance product because of ever-changing associated regulatory and business environment. Now, I will take a minute to run through the definition of wrongful act. Now, any actual or alleged breach of duty, breach of trust, negligence, misleading statement, omission, breach of warranty of authority, or other act by the D&O of the entity or any outside entity or any matter claimed against them solely because of their status as a DNO of the entity can be put as a wrongful act. So we can see that the definition of wrongful act is pretty broad. Every insurance contract has to be triggered due to the perils which it covers. Wrongful act is one of the main key perils which is covered by a DNO liability insurance. This is the contract. This slide takes care of the contract form. The DNO liability insurance contract form is what is known as a claims made and reported form. The other type of contract form which is available in liability insurances is an occurrence form. But here I will cover the claims made and reported form only. This basically means that an incident that may lead to a claim made must happen during the policy period and also must be reported to the insurer during the policy period. So, I would not want to dwell too deeper into technicalities, but it's better to understand that the DNO liability form of contract is the claims made and reported form. Now, moving on to another important definition under the policy: who is an insured person? The policy covers the directors and officers. It covers the employees in respect of the EPLI claims only. It covers the entity for EPL and for securities claim. A few examples of employment practices claim or EPL claims include sexual harassment, sexual discrimination, unfair or wrongful termination, unfair deprivation of a career opportunity, employment-related misrepresentations, and many more. I'll cover a few claim scenarios in the next slide now. Just to run through a few examples, these are some of them are theoretical, some of them have happened and have been worded in a manner where the identity is not disclosed. So first case in brief is a bank loan default by a company. Now a bank had filed a criminal case against the company and managing director of the company for default on loan account. A prolonged legal battle followed the case. The case was dismissed by the lower court and the defaulter had appealed to the higher court. Now the defense cost incurred by the director was advanced by the insurance company to the director because he had a directors and officers liability insurance. Another case is a subsidiary versus a promoter company, wherein a subsidiary company of the promoter group was engaged in a niche area of software. The promoter company, along with the fund managers, entered into a subscription cum shareholder agreement with the subsidiary company, stipulating that any opportunity offered to them in the area of specialization of the subsidiary company shall only be pursued by the subsidiary company, all its wholly owned subsidiary. In due course of time, the promoter company entered into various ventures which encroached upon the specialization of the subsidiary company. Now the shareholders of subsidiary company sued the promoter company for violation of the agreement, and the damages were sought to the tune of 3,000 crores. So you can imagine the scope and the quantum to which legal battles you can be exposed to. Another example, I'll brief. A bank had extended a loan to a person and his spouse. They were primarily involved in running a small-scale unit. On non-payment of loan, the bank moved to court and the court ordered that the pledged property may be taken over by the bank in lieu of the non-payment of the loan. Now, the bank, along with the police and court officials, implemented the court order, but the person and his spouse filed a criminal case against the managing director, CFO, and legal head of the bank for extortion, housebreaking, and criminal trespassing. So, criminal charges were pressed against the bank for what can we say, like recovery in an inappropriate manner. Then there are many cases to run you through a few scenarios where employment practices come into the picture is when MNC company had hired two senior bankers, and they were made to understand that they were head of the new subsidiary. The setting of the subsidiary kept getting delayed, which soured the relationship between the employees and the employer. Now, the company, after a few years, dismissed both of them, citing incompetence and absenteeism as the reason. Now, both the dismissed employees filed criminal cases and claimed damages of 80 crores against the directors of the company for alleged cheating, fraudulent misrepresentation about the job. So, from the so these are just a few examples that I've briefed upon. I hope that it must have given you some idea of what kind of liability can come across. So here I will run through a few factors which help decide the sum insured of any particular policy. As financial planners, if you ever come across such a query from your clients that what should be the sum insured, then the following points must be kept into consideration, which include what line of business your client is into, what has the present and past functioning been like, what is the company's turnover, what is the organization size, and what is the degree of exposure in terms of how many jurisdictions do they operate in. And all the questions, they kind of point towards some degree or the other degree of exposure, but these are the few things which you can keep in mind. Certain key extensions which are available under the product, they include territory and jurisdiction. Every liability insurance operates within the defined territory and jurisdiction. We need to ensure that it is appropriately chosen in line with the operations of the insured. Automatic cover for existing subsidiaries or automatic cover for newly acquired subsidiaries. Now, we need to ensure that the policy wordings which we choose have the provisions to cover or include existing or newly acquired subsidiaries. Similarly, what does the policy contract say with regard to the advancement of defense costs? What does the policy say with regard to the employment practices? What does the definition of insured person include? Does it include the legal heirs, estates, and legal representations or representatives of the directors or not? Will the joint property of the director be held liable as well? So these are the things which one needs to be very careful while choosing what insurance company or what underwriter and what product you have chosen. Well, thank you so much for being a wonderful listener, all of you. That's it from my side. Thank you. I will open the chat box to questions and queries.
Thank you indeed, Puneet. It was really very good. I think you opened a lot of vistas which were not in our radar. Puneet, I have got some questions like I'll just state personnel while coming to office, if any employee gets injured, on that case is employer liable?
Well, the operating clause says that while coming to work and while going away from work,
Okay,
the
yeah.
workman compensation comes into the picture. But if it is proven that the employee was not going back home or was going somewhere else, then
Okay.
then it will not be covered. Similarly, if the employee is outside of the office on official duty,
Okay.
then also it falls within the purview of the workman compensation or employees compensation.
And in the same employee compensation policy, if worker does not go to commissioner, then can commissioner force the employer to pay suo moto?
No, it is a form of legal liability policy. So the worker has to put a claim against the employer.
Okay.
So the employer, the employee or the worker need not go to
Approach.
the
Yeah.
workman compensation commissioner. They
Mhm.
can simply send a notice to the employer claiming compensation.
Okay, I think we need to cover that in case of influence under alcohol. the employer liability arises in case a person is under influence of alcohol?
No, unfortunately, it does not.
Puneet, I noted down a few points like in your director and officer policy. You indicated earning shortfall than the projected figures. Can also invite this liability, D&O liability.
So, a wrongful act or a alleged wrongful act
Mhm.
can attract
Yes,
liability
yeah.
against the directors.
But the earning shortfall can be on various counts.
So this is what will be probably contested by the investors or the shareholders, that what was the basis of making those projections, and if those projections were made keeping in consideration factors, then it might tantamount to misleading.
Yes, IT companies especially are giving projections like they're giving this every quarter to quarter. They're giving projections like what the investors can expect in the coming quarters. And there, I think everything is very closely monitored in IT companies, tech
So,
companies.
so if that leads to a substantial loss for the shareholders or any investor,
Any case you have encountered in India, this kind of case?
uh, I have heard of a few examples. Yes, I mean I can't take names, but yes, there have been cases
Okay, in India.
in India.
Yeah, in foreign we know that lawsuits are very common in this case, and the companies are really aware of all these things. Like when they give something in public domain, they vet it a lot. There's nothing should go out of their hands. And you also touched upon unfair deprivation of employment opportunities. Can you just clarify on that?
I'm sorry, beg your pardon.
Unfair deprivation of employment opportunities that can happen between employees and the employer.
So, in India, most of the times, the cases which have come into the highlight or which are very prominent are usually on harassment cases,
Yeah. Mhm.
where directors are.
Like promotions in case a person is deprived of promotion, that if the employee can prove that it is deliberate, then it
So,
probably,
uh, one of the key factors in this insurance is that why I kind of highlighted on the defense cost
yeah,
in more than one instance is that uh, the directors uh, the employee can sue the director for lack of opportunity or for whatever reason, and they can allegedly blame the directors or key officers of the company for anything, but it is the defense cost which is incurred by the directors and officers, or the which would have to be incurred by the entity itself or the employer itself, which is huge. And if the employee can prove that yes, this is what happened, then they can look forward to
yeah.
some settlement amount as well.
Puneet, you also touched upon sexual harassment. I think employers are really alert to this nowadays. You discussed employee versus company. So, do companies also cover employee versus employee? These kind of cases, sexual harassment?
Yes, so when I say officers, the definition of officers includes all the key
Yeah,
people in
yeah.
an organization in a managerial position.
Hmm.
So if a manager or a senior manager or even an assistant manager has
Yeah.
10, 15, 20, how so many employees or team members working under him, and he is in a decision making position, then the subordinates can, of course, the policy will consider that assistant manager as an officer as well.
And the companies have to follow a protocol, like HR have to follow a protocol. Otherwise, the employee can take it as a case against company in case it is employee to
So,
employee
uh,
sexual harassment.
most of the organizations, this is what the primary purpose of the HR department probably is,
Yeah.
because they are very well aware of all the exposures which they have as an employer. and they need to ensure and adhere to all the best practices.
Puneet, there's a question they are asking about your vision. How do you see the liability insurance business in India?
I mean, I have been in the industry for almost 16 plus years now, and over the years, the awareness has definitely gone up. But it is unfortunately a direct result of a contractual obligation or a contractual requirement that the companies are taking or buying liability insurance. Either it will be a compliance matter if a company is dealing in hazardous material which fall under the Public Liability Act. Then they will be pointed out by their auditors or compliance or company secretaries that they have to buy this particular insurance, or they will be uh, contractually bound by their foreign counterparts that you have to have liability insurance before we sign any agreement. But thinking from a domestic perspective, the legal scenarios are changing. It is as more and more, I mean, awareness it increases, the liability market will definitely grow, and it is bound to grow.
Looking at the West, especially US and European countries, the way the corporates there look at liability, what do you think is the extent of India? India is at what stage India is? This is percentage terms. Are we there even 20%?
No, I don't think so, because we can look at the insurance penetration as a percentage of our GDP as a direct example of
And liability is very low there.
and
Yeah, liability insurance especially.
liability is very low. Motor and health insurance, they form the biggest chunks of the
Yeah. Mhm.
health insurance is number one. It surpassed motor insurance not so long ago. So liability insurance, there is a long way to go for that, because a lot of associated things like at what scale the business is, and what is the awareness of the general public, how the legal structure of the country is. All these things matter, and the best saying is that when you do not hedge or transfer your risk to an insurance company,
Yes.
you're self-insured.
Mhm.
So if
Mhm.
if the businesses, they continue to think like whatever comes to us, we'll take care of it. So they are comfortable being self-insured, but the liability still might come upon them. They just have not purchased any insurance to protect it.
There are no more questions, Puneet, but they are asking, are you into sub-broking business as well?
Sub-broking is not permitted by
Okay.
the insurance regulator in the country right now. And the only form of the point of sale person's model is operational in the country, and but that is restricted only to the retail line of business, including motor insurance, personal accident insurance, home insurance, such products.
So, Puneet, you covered it very nicely, very softly, as if you were playing a guitar. But as a timekeeper, I can see still some 15 minutes to go. So it seems
Yeah.
like you were on the motorbike as well. So, but it was really nice. You covered a lot of aspects that we didn't know. Even I was not aware of many things. So, Puneet, we still have time. You want to state something more about the candidates that were covering the curriculum? Maybe
Uh,
something that comes to your mind?
I I think the principles of insurance have been covered briefly
Yes.
in the FPSB module, and
Mhm.
uh, when I was going through the risk and estate planning module last year around September, I categorically remember that the liability section was very well introduced, focusing
Yes.
on the law of tort,
Mhm.
and that is what is actually the the bedrock or the foundation of liability
Yes.
kind of business.
Mm.
Like what is tort, what is vicarious liability, what is absolute liability. So these terms, if the meaning of these terms is clear in the head, and the principles of insurance are clear in one's head, any product in general insurance or life insurance can be deconstructed by a CFP with ease. It should not be a problem. It will, of course, take a little reading and going through the policy contract,
Mm.
but then the foundation remains the same. The basics do not change. So, be it motor insurance, be it health insurance, be it property insurance, be it liability insurance. Liability insurance can be of any form. I've covered workmen compensation and directors and officers. These days, cyber liability is picking up a lot
Yes. Yeah.
on the individual
Mhm.
side as well as on the corporate side. There is a general liability product uh, which has been existing since ages, and there is a lot of scope with regard to liability insurance and insurance as a subject for CFP professionals. If they wish to understand a particular product,
Mhm.
it's no rocket science.
Yeah, Puneet, we are covering in our global curriculum liability insurance a lot. In India, we don't have many instances, but with examples also we are covering in our global curriculum of insurance. And nice to state that Puneet has cleared all our examinations, which are specialist examinations. And Puneet, are you also appearing for assessments, financial plan assessment?
Uh, the I think the final module is due sometime. I'll be scheduling it next year in March, and I keep going through the CPD, the credit points to hear and
Probably we can run a case study by you on liability insurance.
definitely,
Yeah.
definitely.
Thank you, Puneet. Thank you. You covered it so nicely. And we don't have any questions, Puneet, as of now. So great having you. Thank you so much.
Thank you so much.
Have a good day.
Thank you, Pushkarji. Thank you all.
Thank you, everybody.
Thank you. Bye bye.
Bye, Puneet.